Okay, so um, so what's tough is like Michelle was saying here, we're just jumping into what I think is probably some of the most important information in the course, as far as really having a foundation, understanding what we have to do going forward. And then we have this sort of like squished week where you haven't had access to anything. I generally speaking extended everything to Saturday. And if individuals need to go longer, we can, but I don't want to go too long, because then we're cutting into the next, you know what I mean? So that's why I said, Saturday, the stuff that's due tonight, we can do till Saturday as well, if necessary. But what I don't want is for people to end up not be able to finish the second part because they're still working on the first part. So I was trying to adhere to that timeline, but it certainly doesn't bother me at all to extend everything just to have it all due by Saturday. That just means you have to manage your time in doing that. I think BYU originally set the course up to have things due on Thursday and Saturday, because they found that if they didn't, people were just logging in, Saturday, and then being overwhelmed by the amount of work trying to do it all in one day. And so
I appreciate the extension, just because today's my only day off this week. My manager is on vacation, and so I normally work like 25 hours, and this week I'm working 40. So we also had and I, of course, I tried to get the exam done early, so I did the exam on Monday, and so I was already feeling like, and then when we couldn't get on to anything, I was just like, so thank you. I appreciate the little bit of extra time.
No, it's no problem. And like I said, I just want to make sure everybody can get the work done and have time to like understand it, right? So this chapter is where they kind of introduce the idea of debit and credit rules, which once you've done them for a while, they're like so elementary and so easy. But when it's new, it's really confusing. Like it's just really confusing. And I don't have a better explanation to say, it's just really confusing. So I'm actually going to start with just a review of those. For some people, it may be review, like it'll be like, oh yeah, I already know this. But for most people, hopefully it will be valuable. So let me pull up. So I'm going to share my screen with you here. Let's see. All right. So I think I'm sharing my screen now. So if we're in the modules and we scroll all the way to the bottom, miles and miles of scrolling, we'll see additional study content. I'll open that in a new window. And yes, I have a lot of tabs open. My wife says she takes issue with the number of tabs I always have open. And I don't know why the number of tabs I choose to have should impact her in any way, but it matters to her.
My sister and my husband are the same way. They have like 25 tabs open at all times. I'm like, doesn't that
how can you work with all those tabs?
It makes me feel anxiety. I closed everything out, and I only have like 1 or 2 tabs open, and my husband's like, I don't know how you work that way. So I guess it's just whatever works best for you.
And like, look at my desktop. That's the stuff I need to be able to get to, right? And she's like, how can you have that? Anyway.
How do you find anything? But I put everything in folders. Like all of my, everything in my computer, like on the files, or everything's in a folder, and then the folders had folders. And
I'm just like you, Michelle. I know what you mean.
I can't do that. But hey, whatever works for you. As long as you can find our assignments and, give us the grades, that's really all that matters.
I try to be responsive, and I know where stuff is. So anyway, all right. So here's the debit and credit rules. And so the first thing you have to know, like when you're learning about debit and credit rules, is that you have to like forget the preconceived notions you have about the term debit and credit. Because you've been working with banking accounts probably since you were an adult and maybe a young adult. you tend to sort of like put this value with it that like a debit means money is leaving me. And for some people, it's even like an emotional connection to it. Like debit is sad and credit is happy. And then that a credit means that money is being added to my account. But that's not really what debit and credit mean. Okay, it's just that in a banking context, from a bank's perspective, all money that they own is a liability. Okay, so when you make a deposit in your bank account, you have an asset, but to the bank, they have a liability. They owe you that money back. And so that's why they use the terms debit and credit the way they do, so that an increase to their liability is a credit and a decrease to their liability is a debit. So all debit and credit really mean, they're actually like directional terms. A debit means an entry on the left-hand side of an account, and a credit means an entry on the right-hand side. Debit is left, credit is right. Debit is port, credit is starboard, right? Like it's just directional. It just means left and right, and it doesn't mean anything else, like generally. So that's the first thing, to get rid of the preconceived notion and just say debit is on the left, credit is on the right. And then recognize that it impacts different account types in different ways. But really there's only two ways it can be. Either a debit is increasing and a credit decreasing, or the opposite of that, where a debit is decreasing and a credit is increasing. Those are the only two options. So here's how I remember it. I actually teach this class face-to-face here in Arizona, and actually had a student get up and give like a mnemonic today that I had never heard of that helped her. So she shared that with the rest of the class. Maybe I'll share it with you if I can remember it. But here's how I remember it first. I'll start with my way of doing it. I remember this. I remember that the fundamental accounting equation is assets equals liabilities plus equity. To me, that means assets and liabilities and equity are fundamentally opposite of each other, since they're on opposite sides of the equal sign in that equation. That's what sticks in my brain. So I just have to memorize that assets are increased with a debit and decreased with a credit, and then know that liabilities and equity are the opposite of that. And that helps me like learn all of those pretty easy. Okay. And then revenues and expenses and dividends, all three of those types of accounts all impact owner's equity. So revenues increase owner's equity. So it's going to behave the same way as the owner's equity accounts do. Whereas expenses and dividends, they decrease owners or stockholders' equity. So it's going to behave opposite the way the stockholders' equity account does. That little piece for me helps me memorize all of them, when all I really had to do was learn that assets are one way, liabilities and equity the opposite. And then now that I know what equity is, that revenues behave the same way and expenses and dividends the opposite, because they decrease it. So that works for my brain, but it may not work for your brain, right? So you may have to find some other way to memorize those things. But this concept is super fundamental. Is that, I don't know if there's more fundamental than fundamental, but to the whole process of accounting. I mean, this hasn't changed since like 480 AD. Some Italian monk came up with this, and it's the same process today. The only difference is we have computers doing the work instead of doing it by hand, but it's the exact same process. So once we know the debit and credit rules, we know that anytime we make an entry in accounting, it's going to have an equal amount of debits and credits. So every entry has to balance. And so then we can see this connection. If my asset goes up, which would create a debit entry, an increase to an asset, can really only come about by a decrease in another asset, such as I bought land, so my land went up and my other asset, cash, went down. Or an asset can go up because of the increase of a liability, meaning I borrowed money. So my asset cash goes up and my liability note payable goes up too. Or my asset can go up because the owners have put money into the business. So asset, debit, asset, which is an increase to the asset, credit, stockholders' equity because the owners paid in. or an asset goes up, debit, because I earned revenue and collected it in cash, for example. And that's it. Okay, so like you start to realize there's like, it looks like a lot when you're first learning it, but the more you use it, the more you realize there's a limited number of ways this all gets applied together. And so then you just have to break down these transactions.
Do we have access to
Yeah,
this sheet?
you
or?
You do.
Yeah.
So that's
Yeah.
why I was showing you where to find it. So if we
Okay.
go, so like I said, if I'm in modules,
It's in the additional.
you scroll down to the bottom where there's all of the, oh, I hate you, Canvas. Not you. I love all of you. This thing where you scroll and then it's like, no, I wasn't done loading, and it takes you back to the top.
Yes.
Yes.
I think it's funny that like this is our concern in the modern world. Like I had to scroll twice. It was just way too much, right? I remember as a kid watching the Jetsons, and he'd come home from work and be like, how are you, honey? And she'd be like, I had to push so many buttons today. I feel like that's the world we live in right now. Anyway, so we go to modules, we scroll all the way down, and then under supplemental resources, there's the additional study content.
Okay.
And then in additional study content, we get down here, chapter 3 stuff, and one of them is debit and credit rules reference sheet.
Okay.
So that's there for you. I used to call it a cheat sheet, but then I thought, I want to avoid the use of the term cheat, right? It's kind of like BYU Idaho, like having things due on Saturday because they don't want to like encourage people to be doing their homework on Sundays, even though, you know, different people will do it different ways. But you know, it's like we want to be careful in the terminology we use and the expectation we create.
Avoiding the appearance of evil kind of
Yeah,
thing.
or something like
Don't drink Sprite out of a wine glass kind of thing.
or don't drink wine out of a Sprite bottle. Either way.
Yeah.
But I'll tell you though, like the whole like Sunday homework thing, like I do my whole master's degree, I just decided I'm not going to do homework on Sunday, and it became the greatest blessing to me to have a day when I knew. Like to the point, I got to the point where I was like, if I don't get it done on Saturday, because their due dates were always Sunday at the school I was at, I'm just not going to get it done. And it became this huge blessing. But I realized people have different circumstances than I did at the time. But it really was like a true day of rest for me in that sense. Because right now, Sunday does not feel like a day of rest. It feels like my busiest day of the week. But that's, you know, but it's church stuff, so it's holy, so it's good, right? Anyway, all right. So that's the first concept.
Brother Fox.
Yes.
While you're on that, sorry. One of the things I was struggling with on the self-research or self-reflect or whatever it was when you got to talking about debit and credits and how it increases and decreases. Let's say, for example, it said rent expense, and the drop-down box would give you, does that increase stockholders' equity and I was getting confused at the stockholders' equity when it should have been expenses, right? It should have been rent expense versus, even though that affects stockholders' equity, it wasn't, because I kept missing it. And I'm like, that is stockholder. But I realized after that, when it said rent expense, that was under expenses just as revenues were. And I kept going back to the stockholders' equity because it was under that category. It had the little. So that to me was a little confusing in the drop-down box because I kept going back to, it does affect stockholders' equity, but it was more specific. It more affected revenues or expenses.
Yeah, no. So what you're bringing up is like, believe it or not, it's like this fundamental debate in how to teach accounting. Some people believe in presenting revenues and expenses as if they're part of equity in the very beginning, which is what this book does. And other people are like, you're just going to confuse people because they're kind of their own account, but that have an impact on stockholders' equity. And so that confusion, I guess, that it gave you, like you're not alone in that. It's, you know, recognizing that happens to almost everybody. And if they present it the other way, then it creates a different type of confusion.
Yeah. And even when I missed it, I'm like, no, that can't be it. I put it back in thinking maybe it just didn't understand.
You're like, dang, now I've used 2 of my attempts.
I know.
Yeah. Okay, so Jessica just shared something in the chat that is a chart that's helped her. And you said you found that in the self-study module. So thanks, Jessica, for sharing that as well. Okay, why is my computer being dumb? There it is. All right, so now I wanted to show you, this comes out of the PowerPoint stuff from the book. Oh, don't do that to me. So they have this in the book, but this took me to where I didn't want to be. Sorry, I thought I had this right where I wanted it, and then it did something crazy on me. Hold on. So the next thing I wanted to kind of, I apologize, give me just a second. There it is.
Yeah, I bet you if your wife were watching, she'd be going, it's because you have all those tabs open.
That's right. If you didn't have all those tabs. No, so normally what I do is I grab the slideshow that's in the Wiley Plus content, the Weed Study Practice stuff. I grab their PowerPoint and I steal about 10 slides off it that I think will be valuable instead of making you watch 88 slides. But this morning I had class right up to this and then had student questions. And so I didn't get to like pull them out of the slideshow. So I have their whole 88 slide slideshow, but I just want to show you these few slides. So that's what, and for some reason it wasn't working right. Anyway, so can everybody see what I have up right now, recording process illustrated?
Mhm.
Is that what's showing on your end?
Yeah.
All
Yes.
right. So even to this day, after doing this 20 years, I still follow these steps whenever I'm doing a journal entry, okay? So the first step, I guess, in the accounting cycle, accounting process, is to analyze your activity and then create what's called a journal entry. And a journal entry is where we debit some account and credit some other account to create the entry in our system. So this is their way, this textbook's way of breaking this down, and I think it's really good. So it says, follow these steps, determine the type of accounts involved, determine what items are increased or decreased, and then translate that increase and decrease into debits and credits. So here's our example. Our first event is on October 1st, the stockholders invest $10,000 cash in an outdoor guide service company called Sierra Corporation. So my first, I guess, analysis or whatever you'd want to call it is to say, okay, what accounts are involved here? So the cash of the company is being impacted, and then the common stock of the company is being impacted because common stock represents money owners are putting into the business. And then I would ask myself, well, how are they being impacted? Well, the cash is going up and the common stock is going up. And then my third thing would be to say, well, how does that work with debits and credits? And I say, well, cash is an asset and it's increasing, so that's a debit. And stockholders' equity is or common stock is a stockholders' equity account, and it's increasing, and that would be increased with a credit. And after I've gone through that process in my head, and like I said, I still go through this process even after doing this. I just do it a lot faster now because I've been doing it a long time. Then I can make my journal entry. And so this right here is the basic format for a journal entry. You have a date, you have the account that's being debited always first, the debit entries first, and then the account being credited, and then the amounts over here on the right-hand side. So to show cash increasing, I'm going to debit the cash account. And by debit, I mean enter it on the left-hand side here. And I'm going to credit the common stock account. This is accounting language for cash increases 10,000, common stock increases 10,000. And then the last step of the process is what's called posting. And that's where, so if you think of the journal entry as this chronological record of transactions, each time we have a transaction, we put the date and we put the transaction. Then posting it to the ledger is where we're summarizing each transaction by account. So with the new company right now, we only have used these two accounts. So we're showing right now that we would say cash has a debit balance of $10,000. Common stock has a credit balance of $10,000. So that's the process. I want to go through a few of these just to illustrate the process. So here's a
Can
second.
you do me a favor and tell me why? I don't know why it doesn't make sense in my head on that last one, $10,000. I know increases the cash, but why does it increase the common stock? Is that because they invested that money?
Yeah, so common stock
You know
is,
what I'm saying?
yes, common stock is money invested in the company by the owners. So
Okay.
so the common stock account will increase as the owners invest money into the company.
So is it pretty much always going to be an increase? When would it decrease?
Common stock, you mean?
Mm-hmm.
Yeah, so common stock,
Yes.
yeah, so not really ever. Because even if the company buys back its stock, which happens sometimes, say, think about it, a company issues stock because it needs money. So it's like selling off a portion of the company to individuals or other businesses because they're trying to raise capital. So even if a company buys back that stock when it gets to a point where it has money, that's going to be another thing, but that's way in the future. So for now, let's just say common stock always increases.
Okay.
I mean,
Thank you.
Unless we're doing like a correction entry or something. So let's look at another transaction. So they borrow cash of $5,000 by signing a 3-month 12% $5,000 note payable. There's a ton of information there. Most of it's not important for doing the journal entry. So again, so the basic analysis would be, okay, I'm borrowing cash. So cash goes up 5,000. And then note payable, which is a liability, it's also increasing. This confuses people sometimes because they don't like to think of it in terms of the debt is increasing, but that's what's happening. You have more debt now than you had before. So cash and asset account increasing, so that would be a debit. And then liability or note payable, a liability account increasing, that would be a credit. So our journal entry will be a debit to cash of 5,000 and a credit to notes payable of 5,000. And then we would post that to our ledger. So we would see that cash now has 2 debit entries and notes payable has the 1. And don't be afraid to jump in if you have questions. And I have 2, and sometimes I'm missing them on the chat. Oh, those were just thank yous. Okay. We'll do a few more of these. I don't know if we'll do all 11 just because it'll start to feel tedious. Anyway, unless you want to do all of them, we will. On October 2nd, they used $5,000 cash to purchase equipment. So again, I have an asset equipment that will be increasing, an asset cash that will be decreasing. Then the rules, I say, okay, when an asset increases, it's debited, and when an asset decreases, it's credited. So I will debit equipment 5,000 and credit cash 5,000, and then post those to my ledger. When we post things to the ledger, people always like get confused because it feels like they're doing something new. Honestly, you're just taking this debit of 5,000 and putting it on the debit side. I'm sorry, equipment, this debit of 5,000 and putting it on the debit side, and taking this credit of 5,000 in cash and putting it on the credit side. So when we post things or put them to the ledger, all we're doing is copying them over from the journal, debits to debits, credits to credits. All right, October 4th, Sierra receives $1,200 cash advance from Arnox, a client for guide services for multi-day trips. So here I have to talk this through a little. I'm receiving $1,200, but it's in advance. So I haven't earned this as revenue yet. So I know receiving money means my cash is going up. And if I had earned it, it would be a
Service revenue.
A revenue. But because I haven't earned it yet, it's going to be a liability called unearned service revenue. What that means is that I'm going to owe that client some services in the future. And if I don't deliver on those services, I'll owe them their money back. Okay. So again, I have an asset increasing, which will be my debit. And I have a liability, unearned service revenue, increasing, which will be my credit.
Brother Fox, can you
Yes.
go back to that for just a second?
Yep.
I would have gotten confused on the unearned service revenue, thinking that that would have gone under revenues,
Right,
but it doesn't. It goes under liabilities. Is that
correct.
okay?
So yeah, the reason it's a liability is because you've not yet earned the revenue. So
Okay.
anytime a customer pays you in advance, it happens a lot in my business. I have a like rental storage. People will pay me for a whole year. I can't just record that all as revenue today because I haven't earned that revenue. So instead I record it as a liability, which I call unearned rent revenue. And then each month when I've delivered, I guess you'd say, on my service of letting them use the building for a month, I move that a monthly portion of that liability. I then debit that liability and then credit service revenue at that time because I can now record that I've earned it.
Okay.
Does that make sense? A little?
Yeah.
All right.
Yeah. Thank
Maybe
you.
a lot. Okay. Okay, here we received $10,000 in cash for guide services performed. So we'd say cash is going up. That's a debit to the asset cash. And then revenue is going up, and that's a credit to the service revenue account. Pay our office rent, $900. So now I know I have cash going down and an expense. So this is also confusing. Expenses going up, okay? Expenses going up means that stockholders' equity is going down. So that's the confusing part. So people are always like, wait, but just remember that for now, until we learn closing entries, expenses always increase, and they always increase with a debit, okay? So anytime there's an expense in play, we're going to be debiting the expense and then crediting cash if it's paid in cash. If it's not paid in cash, then we'd be debiting expense and crediting accounts payable. We would still owe that expense. So in this case, we paid $900 cash for our rent. So we'll debit rent expense and credit cash. You guys want to go through the other 4 or 5 of these? Is it helpful?
I have some questions,
Okay.
like more specific towards the homework, just because they're a little bit more difficult than what we're going over. I don't know if
They're
we can.
not more difficult.
They
All
are.
All right. So I think
I agree.
I'll skip through the rest of these so that we'll have time. But I do want to show you. So this is a summary of all of these journal entries we just made. Okay. And then this is the general ledger. So the general ledger, like I said, each time we were doing one of those journal entries, we would then post it to the ledger. The journal entries were chronological each time something happened. And then the ledger just summarizes all of the transactions by account. After we do this, we need to find the balance of each of our accounts. On an account like unearned revenue over here, that's pretty easy. There was only one entry. It was a credit entry for $1,200. So now the balance is $1,200. But on like our cash account, it's not so easy because we've had all these entries. So in essence, what you have to do to find the balance of an account is you add up both sides. And you don't write it down anywhere. This is just, so you add up both sides and then you subtract the smaller side from the larger side. And that leaves you with a balance on the larger side. Now that sounded confusing. But so if I add all these up, 10,000, 20, 25, I have $26,200 in total debits to the cash account. And I have 11,000, is that right? 5, 9.
Yep.
Yeah. So I've got 11,000 in total credits on the cash account. So I subtract 26,000, or I take 26,200 in my larger side, subtract the 11,000, and I'm left with a balance of 15,200 on the debit side. There'll never be negative numbers in here. Okay. A negative to the cash account would be a credit, not a negative number. A positive to the cash account would be a debit. So we're left with this balance of 15,200 on the debit side, which means our cash balance is a positive 15,200.
So if you had the larger side on the credit side of the cash account of say $2,000, you're going to write that as a positive number, but really it's reading as a negative $2,000.
Right. This would be,
Is that correct?
and the terms you would use is my cash account has a credit balance of 2,000. Now, if you think about it, a cash account can't really have a credit balance. I mean,
Right.
you could have a liability, but you can't really have negative cash. You could just
Right.
have, but anyway, so yeah, so like here, our common stock account has a credit balance of 10,000. And remember, I guess the focus is that like, this is sort of the language of business. And so using the proper terms, saying I have a debit balance or a credit balance is helpful. And then when it all starts to click and you understand it more, then you'll have the terms in place. But you'll recognize that, you know, what this means is I have $10,000 is the amount of money invested in this business by the owners. $500 is the amount of dividends paid out to the owners during this period. We brought in $10,000 in revenue, paid out $4,000 in salary and wage expense, and so forth. So I think that's.
Are those the common T accounts on that general ledger? Is that a T account?
These are T accounts, yes.
Okay.
This is a good question. I didn't use that term, but yeah, so people refer to these as T accounts because of this T shape right here. And they won't usually be labeled debit and credit, but that's what it means. Debit on the left, credit on the right. All right. So once we have this summary of the general ledger, and we have balances for every account, then we can create what's called a trial balance. And a trial balance is just a summary of the balances of the accounts, but without all the rest of that transactional information. So again, people get confused because it's like, okay, so now you're telling me to make a trial balance from this. What am I supposed to do? Seriously, you're just taking the cash balance, which was a debit of 15,200, and writing it out right here. So you're listing all of the accounts and their balances either as debits or credits. And then in the end, they should balance because you need to have the same amount of debits as you have credits. That's all a trial balance is. What's cool about a trial balance is if you had to make the statements, an income statement, a balance sheet, a statement of retained earnings, you have everything right here, right where you need it. So if I was doing an income statement, I would just say I've got my revenue, 10,000 less my expenses. If I were doing a statement of retained earnings, once I calculated my net income, I could take my beginning retained earnings, which are 0 because it's a new company, add in my net income, subtract out my dividends, and that would give me my ending retained earnings. And then if I was doing a balance sheet, I have my assets, my liabilities, my stockholders' equity, which is the common stock plus that retained earnings I just calculated. So the trial balance gives you everything you need to make the financial statements, all summarized on a single paper. So that's as much as I wanted to cover as far as presentation. Hopefully it gave some context to stuff you were trying to read through in the book, and now we can look at some specific homework problems that might be hanging you up. How's that sound?
Great.
All right. Let me see. I've got, let's see. How many do I have on my Brady Bunch screen over here? We got a good sized crowd of us. I think there's 9 of us together. So it really is a Brady Bunch screen, perfectly 9. Gretchen, that puts you in the middle. So you're, you know, I don't remember. I guess that'd make you mom and dad. I don't know. I know some of our younger students are like, what's the Brady Bunch? Like,
Wasn't
Oh,
the
no.
middle Alice?
maybe it was Al. You're like looking up at everybody. Like, anyway, so let's look at homework. So I'm going to go to Wiley Plus assignments. So unfortunately, when I bring it up on my end, it's already pre-filled, so you can't, you know, because it's like the key for the instructor. So what assignments or what problems did you guys want to look at?
Okay. Does anybody else have anything before I ask mine?
Jessica,
Or can I go first?
Spoke up first.
Okay.
You don't have to be nice.
I'll go.
Oh, yeah.
Okay. So it's a journalizing activity, and I apologize if other people aren't there yet, but it's 3-8 and it's part B.
Is it
It's on the second
part 2?
homework.
Okay.
And it's just more complicated than, you know, oh, here's some cash, common stock. Like that makes sense to me. I'm understanding those concepts. But like, for example, you know, line 11 or on March 11th, you know, the theater contracted, you know, with a person for concession stand. So on that line, I feel like that's a no entry. They just made an agreement.
I think I'm not
Is that
seeing
right?
what you said problem, or what is it?
3-8. It's the last problem.
Problem.
But it's like
So there's
yeah.
a brief exercise 3-8.
Oh, yeah, -8A.
Okay,
Yeah, sorry,
sorry.
the last one.
I was looking
So
at
it's the second one. So I got the T account, the B. Yep. And so is 11 no entry? Okay, good. I'm glad to see that that's no entry. But so then when you get further down at like 31, so there's paid salaries. That makes sense to me. I know what to do there. But 30, like the second thing that happened on the 31st, received statement from our Laszlo. Why am I saying that weird? Anyway, showing gross receipts. Like I don't understand that one. Can you explain that? You know, we're
Sure,
talking
let me
about
find it.
percentages and what to do. I mean, and there's 3 lines too. So I'm like,
Right.
what account? So anyway, it's just more complicated than what we were talking about. So I just wondered if you could
Sure.
walk through that.
Yeah, so sometimes
Thanks.
there's something called a compound entry, okay, which has more than just one debit and one credit. It might have a couple debits and a credit, but they all still have to add up, right? You have to have the same amount of debits as you have credit. So let's look at this one. So we received a statement from our Laszlo showing gross receipts from concessions of $10,400 at a balance due to the TriQuil of 1560, which is 10,400 times their 15%. I guess that's their deal.
Which I have different numbers than you. Is that
Right.
normal?
Yeah,
Okay.
that's normal.
Because I can't put in what you have, but
Right.
the same
As-
concept anyway.
What that does is allow students to work together with, but they still have to both do the problem, right? That's the
Right. Just not get the answers. Okay.
Right. So Laszlo paid half the balance due for the rental of the concession stand and will remit the remainder on April 5th. Okay, so you're right. There's a lot. I feel like this is like some kind of psychological discussion. Like
yeah.
let's unpack this. Let's see where these feelings are coming from.
So what I thought, can I just tell you what I was thinking?
Tell me what you were thinking.
So would it be half of the balance due? Mine is 2,070. I don't know what yours says. What did yours say? The 1560. Yeah, his says 1560. Mine says 2,070. So I think it would be half that balance.
Mm-hmm.
Let me see, what else did I put? So cash for half of that, and then counts receivable. I don't know. Anyway, maybe I shouldn't tell you what I was thinking, but it's confusing.
I won't judge you. Okay, so here's what's happening. So I've incurred an expense. So my debit is going to be like rent expense for the whole amount. In this case, it's 1560. Let me scroll down here. At least.
Says rent.
Oh, I'm receiving. Sorry, I misunderstood.
Yeah. So you're getting cash for half
I'm
of it.
receiving money from this guy I'm renting to. Okay, so the total amount of revenue I've earned is 1560. That's going to be my credit to revenue, to rent revenue. Okay, but I'm only receiving half of that in cash. So half of that will be debited to cash. The other half is an
accounts
receivable.
Right.
Got it. Okay, so that's what I had.
So we'll do cash, accounts receivable for half. I'm sorry, cash for half.
And then
right.
Service revenue for all of it.
Yeah, or this is rent.
You get it all.
In this case.
Oh, okay.
Right. So with
rent revenue.
with revenues and expenses, what's weird about it, okay, or not weird, I guess, but it takes some getting used to, is revenue, we record the full amount we've earned when we earn it, even if we haven't gotten paid for it yet. So we're recording that we've earned all $1,560 in case of my numbers of rent right now. So if you were to translate this entry into like plain English, thinking of it as a language, what this says is I earned $1,560 in rent revenue by providing the place to the guy to use. Right. I collected 780 of it in cash, and the other 780.
The rest is on the account.
Paid in the future. Yeah.
Yeah. Okay, that makes sense. I did have one more that I'd like. Okay, so on March 10th, so the balance paid due on the Star Wars movie rental, and then I have 2,900 on March 1st accounts payable. I didn't really understand what that second part meant. Like, where did that number come from? I
Okay,
don't
so
know.
let's see. I think that means
Sorry.
we have to go back to March 2nd and say that they rented these Star Wars movies. The film rental was this amount.
So that would be a rent expense for the total amount, then cash for the
Well,
amount that they
no.
paid, right?
No,
Or
so
no?
so the rent expense probably got recorded back here when we rented it on the 2nd. I would
Right.
guess.
Yeah, so
Right.
so it would be for the
So on-
second, it would be a rent expense, a cash credit, and accounts payable credit because they didn't purchase all of it at the same time,
Correct.
right? Okay.
Correct. So there's
So
our,
then,
and then so the accounts payable, that's the amount we still owe right now, $8,100.
okay, yeah.
So then we
that's
get
what I
down to
had.
the 10th and it says we paid the balance due on the Star Wars movie rental. And 2,900 on the March 1st accounts payable. So we had some accounts payable when we started the month. It tells us up here at the top. So we're just going to show our accounts payable going down by the combination of this 8,100 plus, where was it at? This 2,900 here. So a total of $11,000. So we'll
So
debit
the
accounts
81,
payable
okay.
to reduce the accounts payable, and then we'll debit and we'll credit cash to reduce our cash by that amount. So this is saying we're paying cash. What are we paying it for? To pay off our accounts payable.
Okay, and I have those reversed on when your March 2nd, you have accounts payable first and then cash. Is that important? That needs to be in order. Is that correct?
No, it doesn't need to be in order.
Oh, it doesn't? Okay, because I
Unless-
have cash first and then accounts payable, but that
They're
I
both
won't
credit
miss points
entries.
for that. Okay.
Every once in a while, like you'll get one of these problems where it's just dumb, and I'll have like this special instruction that'll be like, put your accounts in alphabetical order, and you're like, well, nobody ever does that. Or but typically on a journal entry, it does not matter as long as you do your debits first and then your credits.
Okay. So, sorry, I just want to make sure that I understand it completely. I did have one other question if there are no other questions, but I can wait to let other people.
Jess, you're the only one talking, so
Okay.
because you're helping me.
I just want to make sure I got that right. So like we're adding the accounts payable from March 2nd plus that 2,900
Correct.
to our cash for March 10th.
No, we're not adding it to our cash. We're
Oh,
right.
I mean crediting to
right.
our cash.
So our cash is going down to
And
pay off
accounts payable.
those debts, those liabilities.
Okay. Okay. My other question has to do with exercise 3-19. That's the one where we talk about, and this is in the self-guided. So I went back and watched that again, but it's talking about, I guess I'm just asking for context because I don't really understand the errors and like why some of them make sense. It's obvious, but then others, I'm like, I don't know. Is that a problem? Like it seems fine. So if you could provide some context on that, I guess.
Sure. Yeah.
And-
So for the record, I hate this problem or this.
Oh, okay,
exercise.
good. Me too. Because
Um,
there's no video for it. I like walking through the videos and then, understanding it, not just like trying to get the answers. But anyway,
Right.
this one was hard for me.
So yeah, so it says for each error, indicate whether the trial balance will balance. If the trial balance will not balance, indicate the amount of the difference in the trial balance column. Oh, and the trial balance column that will have the larger total. So this is kind of hard. In fact, the only way for me to do it is for me to like write it out as I do it. And like, so I'll try to talk through it and see if it helps. So a credit
Yeah.
posting of $600 to accounts receivable was omitted. So we were supposed to credit accounts receivable $600, but we didn't do it. Okay.
Yeah, that's a problem. I can see
Right.
that.
So the first question is the trial balance in balance? And so if we only miss
No.
the credit posting, then we're not going to have the same amounts of credits and debits. Okay, that's really what it's asking. So if we missed a credit posting, then we will not be in balance. And how much will it be off by? It will be off by 600. And then which column will be larger? Well, if I omitted a credit balance then my debit side is going to be the larger column. Does that talking through it help a little?
Yeah,
Yes.
yeah, that makes sense.
Okay, so let's look at the second one. A debit posting for $710 for prepaid insurance was instead debited to insurance expense. So this type of error, I was supposed to make a debit entry and I did, I just made it to the wrong account.
Okay.
So in that case, I was supposed to make a debit and I did, which means I'll still be in balance. I'll have the same amount of debits
Okay.
that I have in credits. So there won't be any difference and there won't be a larger column. Does that
Okay.
make sense?
But that,
Those are actually
but
harder errors
ultimately,
to
that's
find.
a problem.
Sure, it's a problem because prepaid insurance is an asset and insurance
Right,
expense
okay.
is an expense. So I've just coded an expense as an asset and I'll end up having too many expenses, or I mean, too many assets in the future. But as far as my trial balance,
Okay.
it won't be readily obvious because
Everything's
my debits and
balanced.
credits will still balance.
Well, and your income statement would be incorrect.
Correct. Correct, it would be incorrect. Right, because I'm going to be showing, I'm going to be showing or not
Revenue.
showing an expense that I have.
Right.
So my balance sheet will be off and my income statement will be off. And then chaos. No, then you go back and find the error and fix it, right? And you go, this is why they pay me. It's nice when you're doing it like as a CPA for businesses and you're looking at all their dumb mistakes and then you're like, that's okay. I'm billing at $200 an hour. So
Right.
I'll take care of your mistake. Like, no problem. I'm billing at 200. It doesn't mean I'm getting paid 200, just so you guys know. All right. That's the other thing. All right. 3, a collection on account of 380 was journalized and posted as a debit to cash 380 and a credit to accounts payable of 380. So if we were collecting on an account, we're collecting. So we should
We're
have
getting
debited,
cash. And
right?
then,
We should have debited cash and credited accounts receivable, right? Because that was money
oh,
owed to
okay.
us. We accidentally credited accounts payable. So now we're making our liability go up instead of money owed to us go down. So that's the nature of the error. But because
Okay.
we're doing a debit and a credit of equal amounts, we'll still be in balance on our trial balance. So that's the imbalance.
Right.
Yes, no difference, no column larger. But certainly that's going to give us problems later because we're going to have a liability there that we don't really have, and we're going to be missing. And we're going to have our cash asset plus the accounts receivable asset. We're going to have too many assets. Credit posting of $290 to income taxes payable was made twice. So here,
This one makes sense to me. That, you know, that's double counted. So no, it's not in balance.
right, and I'm going to have a credit balance of $290 too much, or my credit side will be $290
right,
too large.
because it was doubled. Yeah.
Cash purchase of supplies for $290 was journalized and posted as a debit to supplies 30 and a credit to cash of 30.
Oh, I got that one wrong.
Okay, well, so
And
let's,
I realized why after, but that's a little tricky the way it's worded.
right. So what it looks like here is we just did the wrong amount, right? Which again happens all the time in real life. That's a normal error. But because we have a debit and credit that equal each other, our trial balance will be in balance. Again, when you do one of these that screws up the trial balance, it's pretty easy to find, because when you go to do your trial balance and it's off, then you're like, oh, I got to go figure out what caused that. Whereas the other ones often don't get found out until a little deeper in the process, when you're like, wait a minute. A lot of times it doesn't happen until you get your bank statement, and then you're like reconciling it and you're like, wait a minute, why do I have less cash than I thought I did? Well, it's because I entered it wrong. All right, last one. A debit of $395 to advertising expense was posted as $359. And so what I don't like about this one is I guess we're left to assume that we did the $395 correctly on the other side, the credit part of the entry.
Right.
And if that's true, then we wouldn't be in balance. We'd be off by $36, the difference between $395 and $359. And so, but I hate that they leave me to assume that, because to me, anyway, so I don't know, did that help?
I
Yes.
did.
Okay. Everybody's like, I'm not looking forward to homework number 2. That's like you were looking forward to it before, but now not. Like a while ago, you were like, I'm really excited with my plans for the evening.
And it's frustrating in that if you miss something on part A, you've got to fix everything before you can even go on and make sure you understand it. So what looks like one problem turns out to be an hour long sometimes. Just
yeah, no, yeah, it's a dirty trick, right? Like you look at it, you're like, oh, it's
Totally.
just like 6, 7 problems. I can handle this.
Yeah.
And then it's like, no, just
Every
kidding.
problem
It's
has,
really
like,
like 30
Yes.
problems masquerading as 6 problems.
Yes, and I'm sitting here, I'm like, it's been 45 minutes and I'm still here, but I realized, okay, when you're looking for one thing and that takes forever and you can't do anything else until you find that, then you're just kind of stuck.
Yeah. All right, so I'm reaching point. I have to be at another meeting in about 6 minutes. Any last questions I can try to answer? And
No, that was helpful. Thank you.
I'm a little curious about how many people took the exam and what our class averages and stuff. I don't know if everyone's taken it though.
no, probably not even half the people have taken it.
Oh, really?
Yeah,
Oh.
most people like to wait till the very last minute.
I couldn't
And
handle
what
it.
they're saying to themselves is, I'll study all the way up to the end of that. But mostly
Yes.
what they're doing is worrying about it all the way up.
Creating anxiety is what that did. I took it last Saturday. And honestly, if you study the material, and Brother Fox, you've done a good job in covering the things that need to be studied. It's not painful.
You said that, though, there's somebody else sitting on here going, I did all of that and I still didn't do as well as I thought I would. So
I did better than I thought I would, but honestly, the material wasn't what I was worried about. It was all the rules that came along with Proctorio that seemed so strange. Like, why do you care if I'm drinking during my test? Which I did, by the way. So just so you know, I probably got flagged for drinking water, but
just so you know, if Proctorio flags you, it's kind of like, I ever see that video of the guy saying, like, if you're offended, nothing happens. And so if Proctorio flags you, nothing happens. Okay. All it does, it sends me an email saying this student appears to have took a drink of vodka at, no, it doesn't say that. It'll say this person has like an exception at this timestamp. And then if I need to, and then some, like a human reviewer looks at that and they do a little summary like, oh yeah, student was, and usually it's like someone walked through the background at this time, and I don't even check those, right? But occasionally it's like, no, student was Googling something on their other screen, and then we pull it up and look at the other screen and be like, what that was a dumb way to cheat. And so honestly, what it does is if it creates an exception, it gets reviewed, and then a list of those reviews gets sent to the instructor for our review. And so if it's something like that, like I took a drink or, it's not a big deal. I feel like they give you guys anxiety unnecessarily.
I really do. Like, I was seriously like more anxious about, I was more anxious about, well, I mean, who goes 2 hours without a drink? And it only took me like 30 minutes to do the test.
I go like 8 hours without a drink every night.
Right. Oh gosh.
I can't. I don't even go
in his
I don't
sleep.
even go
In
the
his
whole time
sleep.
without a drink.
Brother
So
Fox, is that a thing where we cannot use scratch paper during that?
No, you
Oh,
can
I
use
used
scratch
it.
paper.
Oh my gosh, I wish I would have known that. My life would have been easier because I hate the online whiteboard.
The whiteboard
hate the
stinks.
whiteboard.
That's my generous term for it. It stinks.
And I remember things as I'm writing them, and when I couldn't write it down, it was really painful to have to fool with the whiteboards. So we can use scratch paper.
Yeah, and so here's the thing: the BYU even says like just hold up the blank paper to your camera. And I'm like,
I did that.
right?
I was
And
like, here you go.
You're like, well, that's nice, except for like, if I were a cheater, right, I would have like my paper with all my notes on it down here, and then like a blank piece, and be like, see. So the bottom line is, if someone's going to cheat, I don't know
They're
that
gonna find a way.
Yeah.
I mean, I guess
Okay. As long as I can use scratch paper, I'm happy. That was hard to fool with the whiteboard.
All right.
I was personally offended that I wasn't allowed to snack during my quiz, my exam. I was like, this is my house.
Think without snacking. It's like,
Now
can't
you know
think
it's
about
only 30 minutes,
Yeah,
not 2 hours.
Right.
go ahead.
Not the point.
Have a
My
snack.
house. My house.
Okay.
All right, I have
Thank
to,
you,
get to another
Brother
meeting.
Thank you.
Thank you.
Thank
Thank you for everything.
Thank you.
Bye-bye.
Bye-bye.
Thank you.
What is